1 week is left to get your taxes done and in the mail. The normal April 15th tax deadline is pushed back to April 18th this year. Thank goodness. Craig Bolanos, the CEO and founder of Wealth Management Group, is at the ready with tips to lower your tax bill or boost your refund. What can you tell us, Craig?
Well, Angela, I'm smiling because I love that you mentioned April 18th. Procrastinators all across America are celebrating in chorus because everyone gets an extra weekend to do their tax compilation. But to your point, once the calendar year closed on 2022, there's very few things we can do to lower last year's tax bill or increase the refund. But here's a couple things everyone can strategize about. First, save to your individual retirement account. Remember, you might be eligible to make a pre-tax IRA deposit for 2022, even though right now we're in April of 2023. And this is especially key if someone or a family is close to hitting a phase out or a cliff test for certain deductions or credits that they would otherwise be entitled to if their income was lower. If you're self-employed, don't overlook opening up and funding a SEP IRA, or take a look at the Secure Act 2.0, which extended the deadline to create solo Ks for those working as independent contractors or in the gig economy. Number 2 on my list of tax savings ideas for last year's 2022's return, contribute to a spousal IRA. IRA contributions require earned income from a job. However, if you're married and have a non-working spouse, a non-working partner, your income can actually allow them to make an IRA contribution too. So don't overlook that. I think too many people are surprised to know that their non-working spouse or partner can also make a deductible IRA contribution if applicable. And how about number 3 on my list? Boost your health savings. If you have a high deductible health care plan, yes, you're eligible to potentially make health savings account contributions. And HSA contributions are triple tax preference, tax deductible, tax deferred growth, tax-free distribution. That makes them the Swiss Army knife for those looking to do some tax savings and financial planning.
Craig, what are some IRS red flags, ways that could cause you to get an audit?
Sure. Red flag number 1, round numbers. If you're claiming a tax break, it's important to use accurate numbers that you can actually document. Let's assume a sole proprietor spent $5,000 for advertising, $3,000 for legal expenses, $2,000 for this or that. That just seems to be a little bit too convenient that it was $5,000, $3,000, and $2,000, don't you think? Red flag number 2, missing income. If you forget to attach a 1099, you omit a K-1, so on and so forth, that's definitely going to cause the IRS matching program to send you a notice in the mail. So before you do your taxes, develop a checklist to ensure you don't miss reporting any of your potential IRS income sources. And of course, number 3, excessive tax deductions relative to your income. I'm not saying that someone who earns $80,000 a year who says that they gave $40,000 this year to charity is fibbing. Some people are very generous, but if your deductions fell well outside the boundaries and the limits of what would be normal, you best be prepared to actually defend the deduction. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. We're here to help you get retired and keep you retired. If you want to learn more, you can. Go out to our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.